The global economy is doing pretty well right now. But when that happens, we as human beings have this tendency to assume that it will just carry on. However, global valuations of things like stocks and corporate bonds are at pretty high levels right now. And the IMF's Tobias Adrian has a pretty sobering assessment for us about the risks ahead in the next 2 or 3 years.
Today we are in the good times. The economy is booming globally, economic growth is strong, and there's positive momentum. Furthermore, financial conditions are favorable around the world. Corporates can borrow, sovereigns can borrow, and households can borrow. So we see a rise in the debt levels around the world, and we do see easier and easier lending standards. That is fueling growth, but it also presents a challenge in the future.
Now, in a crisis in which we see interest rates ramping up, some governments, some corporations could be particularly vulnerable.
Absolutely. After the financial crisis, central banks around the world have run a monetary policy of accommodation, easy, highly liquid monetary policies. This monetary accommodation is started to be removed in some jurisdictions around the world. And so the overall level of interest rates is slowly starting to rise. At some point, that might lead to a sharp tightening of global financial conditions. So borrowers, for example, corporations or governments that have to refinance the debt might suddenly face sharply higher financing costs.
So some governments and corporations, therefore, in a crisis, won't necessarily have enough buffer, as you call it. That's enough in reserve during rocky times.
Exactly. So since 2008, the banking system has been regulated much more tightly. And so in the banking system, we have seen an increase in buffers, both in terms of capital and in terms of liquidity. Banks have much higher capital and much higher liquidity. But that's not necessarily true for governments or for the corporate sector, and not even for households. And these high levels of overall debt can be dangerous in the future.
Now, you identify China in the report as a particular risk and have done for several years, but China's also done a lot of work to improve its financial stability. What are your recommendations now?
The overall impressive economic growth has gone hand in hand with a substantial rise in debt in the non-financial and in the financial sector. The corporate bond market in China is the second largest in the world. The overall financial sector assets to GDP at 400% is very elevated. And regulators realize that that can be dangerous going forward. So they are much more aggressive in terms of regulating and in terms of making sure that the financial system in China is safe in the future.
Now, there's some suggestion here that we may be entering the end of the major cyclical period of the business cycle. But psychologically speaking, when you're in it, it's very difficult to see the other side of the mountain. What would you say to people now to sort of prepare themselves for the possibility of that happening?
This environment of elevated asset prices might continue for a number of months or even a number of years. It's always difficult to predict when the financial cycle is turning. But historically, we know that business cycles do come to an end. At some point, inflation might reappear, which might lead to a sharp rise in interest rates. At some point, recessions might reappear. So in our assessment, we feel that in the short term, risks are not that elevated, but in the medium term, say 2 or 3 years into the future, risks are building.
So now is the time to prepare?
Absolutely. Today, we have a window of opportunity to take policy steps that prepare us for more difficult times in the future. We should build buffers, not just in the banking system and in the financial sector, but more broadly, we should build fiscal buffers and buffers in many policy areas so that we can deal with any adverse shocks of the future.
In the end, this global financial stability report is all about doing the right things now, rather than waiting for the storm to come and realizing it's all too late. Ryntjes, CGTN, Washington.